The market holds support and rockets higher as expected. Can the bulls keep going, or is this another dead cat bounce? This is Invest with Jacob. Okay, guys, so in yesterday's video, we talked about the fact that as long as the market could hold 51.77, we should see a C wave higher, and that's exactly what we saw as the market came down and held 51.82, and then we saw the C wave rocket up. So now the question is, will this be follow through from the bulls or a dead cat bounce? I'll get into that in just 1 second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP 500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, with this move up, let's jump into the chart and see where we stand. Okay, guys, so here we are on the 2-hour futures chart for the S&P 500. I zoomed out just a little so we could fit a little more of the chart in. And as I've been saying since we topped back here, that we should be looking for an ABC down, and then I was looking for a new all-time high. But what happens is when you break a level of support that's extremely important, like this one right here at 52.75, that does put us in more of a neutral area. And so below that, as long as they held the April lows, which they did, this is a neutral market until we can break back up above our key level that we've been talking about for a while, which is 55.81. And so off of this low, I did say we should see an ABC bounce. And all of our moves to the upside, whether new all-time highs or not, should be ABCs, as this will either be an ending diagonal type structure or it will be a dead cat bounce that gets sold very strongly to the downside. So the bulls did their job. They held 51.77. They actually held 51.82, so just a few points above that, and rocketed higher back to this A wave high. Breaking out over this, we would expect them to hit at least 54.22. That would be our normal upside target at the 50% retrace. And if they're going to push much above that, we would expect 54.93. If they start to rally above 54.93, this should be the first warning for the bears. 54.93 is the 618. And while we can hold the 764, and it is at a very perfect level of this prior breakdown point, it is a little bit less likely that we hold that level once we break over the 618. Doesn't mean we can't. It just means it's less likely. So this should be a warning if the bulls are able to get over 54.93. And if they are, we would look to 55.81 next as our major key level for the bulls to confirm that we would be breaking out to new all-time highs towards 58.30 to 58.50. Now, if the bulls cannot muster much strength and they fail around the 50% or 618 fib, the 54.22 to 54.93 level, we would look for a 5-wave move back down to start the C wave, where you get 1, 2, 3, 4, 5. Either to this low or the April lows would be where you would expect it to find a bottom. Those are both strong support areas. That would be a wave 1 of C. Then we would expect a 2 of C, and then we would look for a breakdown like that, where we really get a strong selling event to the downside, looking at 3,800 if this is what plays out. So two very different paths, two very different places, and they both have significant key levels to watch. The first key level to the upside is 54.93. Above that is a warning to the bears, and above 55.81 makes it very likely we're on our way to the 58.30 to 50 area. To the downside, the first level is that low from Monday, about 51.16 or so. Below that is a warning to the bears, and below the April lows is or bulls, I should say, warning to the bulls. And below the April lows would be a strong indication that we are following through to the downside and would be looking more at that 3,800 area. Again, we are in a very neutral spot here because we did break major but not critical support. So the bulls have to prove that they can recapture those levels and recapture 55.81. Over on the NASDAQ, we said they needed to hold 17,641. They did just that and rocketed higher back over their A wave high, which is a good indication that we are on our way toward the targets up here, this 50%, 618% retrace. And then above that, same type of situation. These setups are very similar in that the 618 to the upside provides the first major resistance for the bears and major warning if it gets through. So to the upside, we would look for the bulls to continue into 19,175 as our minimum area, and then 19,603 as our next target, which lines up perfectly with this breakdown area. Above that is a warning, and then above 20,132 does tell us we're likely on our way to all-time highs, and the 22,000 level after that. So 19,603 is your warning level. If they can't hold that, 20,132 is critical resistance for the bears, and above that, the bulls are fully back in control of the market. If the bears are able to hold, we would look for a 5-wave move to the downside to start 1 of C, which should come down and test the April lows. You don't have a secondary low like you do on the ES, so it should come down into this April low and also August low area. Then we would look for a bounce and a full-on breakdown. Now, in strong selling events, this is just a warning. Sometimes when you get down into this area, you don't get much of a bounce. You would normally expect a 0.5618 retrace here and then down, but sometimes you get a very, very minimal bounce. So be careful here trying to wait for a bounce. If you're looking to short, you can get this 1-2 setup up here and then short from here and look for this as your stop. So bears and bulls have similar setups on both charts. We know the key levels, the April lows on both charts. And then on this chart, the first warning to the bears is 19,603, and the critical warning would be the 20,132 level. Over that signifies the bulls are in control and we're on our way to 22,000. Below the April lows, and we're looking for the bigger sell-off to the downside. Guys, if you love these information that I put out in this video and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It'll take you right over to the webpage. Once you're there, check out our membership plans area. In there, we have 2 incredible monthly rooms that both come with a 7-day free trial because I want you to get in there. I want you to make sure you love it, become part of the trading team, make sure it's for you, interact with us, and make sure it's what you want before you ever spend a penny. You can cancel at any time. You literally have nothing to lose by checking us out. We also have our educational material, our Elliott Wave for Beginners online course and our advanced Elliott Wave course. These courses are helping traders understand these crazy market moves, how to trade them, and what the key levels are. And they're really making sense of an irrational market. In the advanced course, we go through the more complex structures that you see, such as diagonals, double and triple threes, flats, and triangles, as well as how to trade Elliott Wave. Many people kind of basically understand Elliott Wave, but don't really understand when and how to trade because of the 2 paths. If you understand the key levels and what setups you're looking for, this tells you how to trade that and how to understand your risk reward. As you can see on the screen, this is helping our traders understand this market and make real money. But I do understand that if this is too complex or you're just new to Elliott Wave, you might want to get started with our Elliott Wave for Beginners online course. This course helps real traders make real money and finally understand the market in a way that makes sense. It can be so difficult when good news makes the market go down and bad news makes the market go up, and that's because Elliott knew that the news cycles meant nothing long ago. He understood that key levels matter, and knowing those key levels and what happens when they hold and what happens when they break gives you a huge advantage over the rest of the market. This course is 25 videos where we go through 3 different parts. We start with your introduction, where we get you introduced to Elliott Wave, the expectations, the mindset, and how it really works. We also get your chart setup and tools so that you're set up with every tool you need to use with Elliott Wave, how we use it and why, and the Elliott Wave for Beginners area where we go through all of the different waves, how to measure them, how to find the key levels, how to understand how this market works, the theory of alternation, corrective depth theory, the pivot, everything you need to make sense of this crazy market. The really cool thing about both of these courses is if you want to get them at a discount, you can get both of them for $37 off with our bundle pack. Or if you don't want to pay anything at all, you can simply join one of our monthly rooms, as all of our educational material is included in those rooms. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go over exactly where we are on the counts and what to expect, as well as go through several different charts, go through the macro and micro counts so that you can understand the bigger picture and make sure that every question is answered so we're all feeling good going into the second half of the day. We also have all of the trading material you just saw in my room, training material you just saw in my room. We trade the SPY and the QQQ, and we swing in day trade, so we do trade quite often in my room. Now, if you're looking for futures trading, individual stocks, income trading, and advanced training, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, futures trading, income trading, which is crushing it. He had 85 points last month. He averages about 50 points a month on the ES. He is just killing it watching time go by. It's an amazing trading strategy, guys. You should check it out. And also his reduced risk binary method that just crushes the market. He gets you in at a cheap price and gets you huge multiples on your money. And that's how he structures that trade is so unique, something you really have to see to understand. And that's another reason we give you that 7-day free trial so you can get in there and check it out. He also started a challenge account where he put $4,000 into an account, trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we would love to have you in these rooms so we can all make money together. All right, our key takeaways for today. We have the setup for the ABC here. They're breaking out over the A wave. We're looking for them to hit 54.22 to 54.93. Those would be our normal bear bounce areas. Above 54.93 becomes a little bit of a warning for the bears. Above 55.81 is a major warning, and very likely we're on our way to the 58.30 to 50 area. To the downside, if they start a 5-wave move down into the April lows, this will be a major warning for the bulls, and breaking the April lows tells us we're likely in a major sell-off toward the 3,800 area. Over on the NASDAQ, similar setups. We're looking for that bounce to continue into 19,175 to 19,603 and reject somewhere in that area. If they push up through 19,603, the next level for the bears to must hold is 20,132. Above that, very likely we're on our way to the 22,000 area. If they can hold and push down in 5 waves toward the April lows, that would be a warning to the bulls, and breaking the April lows would be a major warning and a very likely indication that the top is in and we are heading down in a bear market. Guys, it's the weekend. Grab yourself a beer or a drink, get out of the house, have fun with the family, do something awesome, get away from the computer, and I will talk to you next week.